Hello and welcome to this video. Here I want to talk about Apple, just to see whether or not the correction that has taken place so far has been deep enough and long enough. As you know that Apple has fallen about 30% from the high since reaching a high late last year. It's down around 30% compared to around 38%, 38% in NASDAQ. So whether this correction is deep enough, and whether it's long enough. Now I'm looking at a monthly chart. To answer the question, I want to look at what has happened to Apple in the past when it has had a deeper correction. What were the structures in those corrections? So if I go back, I see one correction right here. So there was a big rally right here and then there was a correction, and I see that it has come and formed a bottom at the monthly 50 EMA. I've got two exponential moving averages. The orange one is the 50 EMA and the green one is the 20 EMA. So and these are monthly charts, so these are the monthly EMAs. So you can see in 2019 it touched the monthly 50, and that's where it bottomed. If I look at this rally and this correction, and I see that during that time also in 2016 it came and touched the monthly 50. And then if I look at this rally and this correction, I see that it came and touched the monthly 50 again. And then this is the 2008 correction. You can see that it had gone slightly below the monthly 50. Now in each of these four corrections, you can see that at the very minimum it has touched the monthly 50. So where are we in relation to the monthly 50? So the monthly 50 is this orange line right here. Where is it at? It's at it's around 117. So it hasn't come to that level yet. So if it does what Apple did in each of the past three corrections and come to the monthly 50, I would expect price to fall to around 117. Apple closed around 130 on Friday, 31st of December. So 117 would be the initial downside target based on what happened in the last three corrections. Now, if I use a fib just to get an idea of the magnitude of the decline. So let's see if I draw a fib from here to this. I'm going to get rid of the moving averages for a second. So if I draw a fib from here to here, I see that, I'm just going to zoom out, I can see that this pullback was up to the 61.8 fib of this move. Okay, so if I did the same to here, so there was a move and there's a correction. So if I draw a fib of this move, I see that it corrected at least to 50% of the move. It fell a little bit more than 50%, but at least it fell at least 50% of the move. If I do another fib right here, from here to here, you can see that this corrected to 50%, retraced 50% of this move. So we can see that over the last three corrections, this one was to 50%, this one was a 50% retracement, and this one was a 61.8 retracement of the move. Now, if I draw a fib from the COVID lows right here and to the all-time high right here, the 50% retracement is around 118, and that's also where the monthly 50 EMA is. The 61.8 retracement from the COVID lows to high is around 103. So in the past, we've seen that it has corrected, it has retraced at least 50%, and on one occasion, in this occasion, to 61.8 of the move. So if it retraces 50%, this should bring it to the monthly 50. So based on what I see in the past three corrections, it has at least touched the monthly 50 and it has at least retraced 50% of the move. So based on that, we can say that the current correction is not deep enough. It looks like it needs to fall a little bit more. It needs to fall to at least 117, 118 area to match what has happened in the previous corrections. And it would also bring it to the monthly 50. This is not to say that it can't fall below monthly 50. If it falls below monthly 50, the next area would be the 61.8 fib retracement from the COVID low, which is around 103. So based on those two levels, 103 and 117, 118, it looks like the correction is not deep enough. Now, if it falls to the monthly 50, what would be the total decline? So if it falls to monthly 50, Apple will fall around 37%. If it falls to around the 61.8 fib, Apple will fall around 43%. So based on the past, it looks like the correction is not deep enough. Then the next question is, has it been long enough? Well, in order to answer that question, I want to look at the momentum indicators, specifically MACD and RSI. You can see MACD has crossed right here in April and has been moving lower, which means that the momentum is weakening. Now, if I look at the past corrections and see what happened to MACD, you can see that it fell and then it crossed, and once MACD started to move higher, you can see that price started to go up, on a sustained basis month over month. So looks like we need a MACD cross to the upside. You can see right here too, MACD fell. It came near the zero line, and that's when it crossed and started moving higher, and we see prices going up month over month. You can see right here too, MACD fell, crossed just above the zero line, and once it started moving higher, you can see month over month. These are monthly candles, so these are monthly green candles. So if we are to see the same thing again, we would need to see MACD cross. At the moment, MACD is not showing any sign of crossing. And the other thing is that we saw MACD cross near the zero line. This one was near the zero line. This one was a little bit above the zero line. This one, 2008, was near the zero line. So at the moment, MACD is well above the zero line. This is the zero line. So it looks like MACD has a little bit more to come down, but more importantly, I am looking for a sign of a cross. I don't see I don't see any sign of a cross at the moment. Now, before it crosses, what happens is that these histogram bars, they get smaller and smaller. If you look right here, you can see that once it prints the largest bar shows that these two lines are the widest, and then it takes several months for it to get smaller, and then they start moving above the zero line. You can see right here, this was when it was the widest, and then it took several months, and during that time the bars get smaller and smaller until they go above the zero line. So at the moment, if we assume that the current December was the largest bar, it would take several more months, 5, 6, maybe 7 months before they get to the zero line. So based on that, it would seem like there is still some ways to go before we can see a MACD cross. If you also look at the RSI has gone below the 50 level. This green line is RSI 50 level. This is negative. When RSI is below 50 at any time frame, whether it's daily, weekly, monthly, that's an indication that momentum is weak. And because you're seeing that on a higher time frame, on a monthly time frame, that means that any rallies are going to be short-lived. So in order to see sustained rally month over month, you need RSI to get back above the 50 level. You can see right here, it fell below the 50 level, but once it got back above 50 and stayed above 50, when momentum indicators are positive, you tend to see higher prices. You can see right here, it spent some time below the 50 level, and then once it got above 50 and stayed above 50, RSI 50 level, you can see prices moved higher. Same thing here, it fell below the 50 level here in January 13 and then didn't get back until above the 50 in July 13. And once it got back above the 50 and then it stayed above, and that's when we saw higher prices. So at the moment, we're seeing new lows in RSI. We need to see RSI get back above. There are possible, so this would be one area of RSI support. This is where the previous low was. So when RSI was around 44, right now monthly RSI is at 47. The other area of support would be this low. RSI was around 40.7. So if RSI were to fall, this would be the first level of support, and then this would be the second level of support. So we'll see whether or not it reaches those levels. So if it reaches those levels, we'll see whether or not there is some kind of a bounce. But at the moment, RSI is a negative. MACD is also moving lower, not showing any signs of turning. Usually it takes several months for it to turn. So based on that, it would seem that the correction has not been deep enough, long enough. So the answer to the two questions is that the correction hasn't been deep enough and the correction hasn't been long enough. I'll come back with an update in about a month or so just to see where do these technical indicators stand. Thank you very much for watching.